Hello traders, this is binaryoptions.net.au, and today we're going to teach you how to trade with the Relative Strength Index, or RSI. First of all, you need to understand that the RSI is a momentum oscillator that measures the speed and change of price movements. And the first thing you will do with it is to trend spot. The RSI oscillates between the 0 and 100 levels, which are its extremes. The middle level, or the 50 level, is the line that divides a bear market from a bull market. When the RSI is above the 50 level, the trend is up, and when the RSI is below the 50 level, the trend is down. This is very useful because when the trend is up, you will be looking for setups to buy calls, and when the trend is down, you will be looking for setups to buy puts. Now, on this example, you can clearly see that when the RSI crosses above the 50 level and starts to oscillate between the 50 level and the 70 level, we have an uptrend. And when the RSI crosses below the 50 level and starts to oscillate between the 50 level and the 20 level or the 30 level, the trend of the price is down. The first setup we're going to use, or we're going to teach you, is the overbought and oversold conditions, or overbought and oversold setups. These setups better work on ranging markets, but you can certainly use them on trending markets to get on with the main move. An overbought condition is a situation where price has risen to an extreme level that cannot be sustained anymore and is due for a correction or a reversal. On the contrary, an oversold condition is a situation where price has gone to an extreme low that cannot be sustained anymore and is due for a correction or a reversal to the upside. Now, an overbought and oversold conditions can tell us that we have achieved a turning point. For example, in a ranging market, you can see that the RSI will point overbought and oversold conditions at the top and the bottom of the range, so you can easily trade it. There are two levels to consider here. When the RSI reaches the 70 level, the market conditions are overbought and we are due for a correction or a reversal to the downside. And when the RSI reaches the 30 level, the market conditions are oversold, which means that we are due for a move to the upside. Here's an example where we can find both overbought and oversold conditions in this chart. You can clearly see that we have reached a previous level of support. The RSI shows oversold conditions and dips below the 30 level. You can see it clearly right here. When we have a bullish engulfing candle, we have a signal to buy calls on this currency pair or stock, and you can see that you can clearly see that our option would have ended up or expired in the money. The trend continues to the upside, and then the move exhausts at this resistance level. And you can clearly see that the RSI shows overbought conditions, and when price breaks below this low, we have a signal to buy puts on this instrument, and we will have expired also in the money using an RSI Oversold setup. These are basically two setups that you can use in a ranging market, but you can also use them to get on the main move. Sometimes when we are in a very strong uptrend and after a deep correction, the RSI will show you oversold conditions for you to buy calls and get on the main move. This was not the case. This is why we didn't point out a signal to buy calls at this level. The RSI must touch or cross over the 70 level and then cross back down for us to get a clear signal to buy puts, and on the other side, the RSI must touch or cross below the 30 level and then cross back up for us to have a clear signal to buy calls. the second setup we are going to be looking for are bear and bull divergences. We already know that the RSI follows price direction, but there are times when the RSI divergences from price structure. When this happens, we are looking for a bullish and bearish divergence. A bearish divergence happens at the top of an uptrend and it signals a short setup to buy puts, and a bullish divergence happens at the end of a down move and signals a long setup to buy calls. This is an example of a bullish divergence. You can clearly see that price is making lower lows, but the RSI is making higher lows. This is what we call a divergence from the RSI. This is a clear bullish divergence. When price takes out this high, we have a signal to buy calls on this instrument because a reversal is in play. We also need the RSI to cross above the 50 level for us to have a clear signal that we are now in bull country and price has reversed to the upside. This is an example of a bearish divergence. You can clearly see that price is making higher highs on an uptrend, but the RSI is making lower highs. When price breaks with this support structure and when the RSI crosses below the 50 level, we have a signal to buy puts on a counter trend trade. So the setups we are going to be looking for with the RSI are overbought and oversold conditions in ranging markets and trending markets, and bearish and bullish divergence to pick tops and bottoms of extreme moves. Now let's go to the charts to find some setups of our own. Okay, this is the Aussie US dollar 4-hour chart. And the first thing we're going to do is we're going to insert the RSI. So we click on the plus button, we go to oscillators and then relative strength index. And as you can see, by default, we have the 14-period relative strength index and the 30 and 70 level as well as the 50 level. So we just click on it and we already have it. Now this is the 4-hour chart, and remember that the RSI oscillator has to be used hand in hand with simple support and resistance levels. So on the 4-hour chart, if you are going to be trading the 50-minute charts or day trading binary options with maybe an hourly expiration or an end of day expiration, you have to start with the 4-hour chart, because the 4-hour chart will give you clear levels of previous supports or in this case resistance, and you will be actually taking out the noise. Okay, so the levels are very strong, and we have another level here. Okay, now if we are going to be trading the 50-minute chart, we have to do this on the 4-hour chart. Okay, and as simple as that. Then we go to the 50-minute chart, and let me just get rid of these rectangles right here, and let's say that we are actually trading the 50-minute chart that we traded the 50-minute chart today. Okay, so this is actually what today looked like on the Aussie US dollar. We have another level of resistance here that we didn't have on the 4-hour chart, so we might as well draw it. Now, as you can see here, what's happening right now is that the RSI is breaking below the 50 level, as well as the same time that price is breaking this level of previous resistance that was tested as support. So this is a clear signal of reversal. Okay, now let me just insert a rectangle so you can better see what I'm talking about. The RSI is about to take out the 50 level, and price is taking out this previous level of resistance and now support. So we have here a clear signal to buy puts on the Aussie US dollar. Now let's look for some other interesting setups here. We have a very clear bearish divergence when price makes a high here and then makes a new high right here. I'm sorry for that, a new high right here. We use the body candles for our levels of support and resistance, but when we have a wick to the upside and to the downside, you can clearly use just a trend line to join them. So we have here a wick high here. We move to the downside, and then another wick high here. So we have a flat highs, two flat highs, but the RSI is making lower highs. Okay. Now, divergence. This is what we call a mild divergence. This is a mild divergence because price is not making higher highs, and the price is not making higher highs because we have a strong level of resistance here. But price is making flat highs, and the RSI is making lower highs. This means that we have a double top in play, and that we might have a double top in play. Okay. So price is making flat highs and the RSI is making lower highs. This is a mild divergence. And we are in an uptrend because we are making higher lows. When price breaks with this low right here, which is the last low, we have a signal, or perhaps we have a signal to buy puts. Let me just put a rectangle here after the divergence. We have here a break below the last low, and we also have a sharp drop in the RSI below the 50 level. So here we also have a signal to buy puts on the Aussie US dollar 50-minute chart, and you can use the hourly expiration that would have ended up or expired in the money. And if we move this rectangle right here, you can see that the live signal that we got from just a break below previous highs and the RSI moving below the 50 level is actually going our way. Let's go back a little while and let's put on a line here at this heavy resistance level on the 15-minute chart. This is a heavy resistance level because it was tested a lot of times. You can see it here with the weak highs, and then we move to the downside before breaking to the upside. Okay, now before we get this divergence, what you need to understand also is that when price moves to this level of previous resistance and test it as support, okay, we might have here a play to buy calls. And what you need to look on the RSI is a failure swing to the downside. Okay, when the RSI moves below the 50 level at a level of resistance but quickly moves back, just like in this case, we have a signal to buy calls when we take this high, and the signal will also have expired in the money if we had we bought the hourly expiration options. So as you can see, the RSI gives a lot of signals during the trading day, and if you monitor several currency pairs or stocks or commodities, you will get more than enough on your hands to have a very nice trading session.